So I went to a place called Ashley Furniture a couple of days ago. So Ashley's a big furniture brand, actually ranked number one home furniture retail in North America, which has over 800 showrooms. They have a very big presence in the South, especially Florida. I never really heard them in New York, but in Florida, they're very, very big. And since I've been living in Florida, we ordered lots of furniture from these people. So we're a really good customer of theirs. Now, we're getting a new dining room and bedroom set because they're about 15 years old each. Need a little bit of an upgrade. And we ordered that, believe it or not, 2.5 months ago. And it still hasn't been delivered. But I get it. I mean, it's COVID. Everything's on delay. You get supplies different places. I understand that. I get it. Try ordering anything. It's going to take a long time. If you're doing your Christmas shopping, guys, start doing it now because it's going to take a few months to get to your house. Seriously. It's crazy. But my wife and I went there a few days ago, and we were looking to get a new TV stand, 2 end tables, and a coffee table. We just painted the walls, right? A couple upgrades to the house. You know, look a little nice and sweet. So I go to Ashley, walk into the store, and right away when you walk into these stores, you know how it is. I mean, these guys just they come up on you like immediately. It's crazy, right? It's like, let me help you. What do you need? And it's just, you're like, here we go. Anyway, and the kid kind of looked like a little bit of a shady guy. But I said, you know what? Let me play along. You know, he's like, how can I help you? What are you looking for? And I tell him, listen, we need 2 end tables, TV stand, a coffee table. He's like, I know exactly what you need. Just what you want. I'll show you a whole bunch. So he goes, to different parts of the showroom. It's a pretty big place. And he starts showing us different things. And my wife and I fell in love with one set. It was all set together, all the same color, looked really, really cool. So, he does his thing, which salespeople do. He figures out the pricing, throws in all discounts. I'm going to take care of you. And he goes, you know what? With everything, delivery, everything that you need, warranties, it's $2,800, which seemed like a lot of money to me. I mean, 2 end tables, TV stand, coffee table. It was nice, but $2,800 just seemed like a lot. So I told my wife, so you know what? See if they have anything going online where they might have a special. And we do that a lot with stores because they'll have a 10, 15% special out of nowhere. You just got to log on to their account and whatever. So wife starts looking into it. And by the way, my stuff is great with stuff like that. She's like an investigative reporter. She's quick. She can find anything, which is, incredible. But this is what she loves to do, right? She loves this part. So she figures all this out. She starts adding up the prices, looks online, and figures out how much everything's going to cost together for the same exact furniture that's on their website. Remember, this guy quoted me at $2,800. It came to $1,300. The same exact furniture that this asshole just quoted me for $2,800. So as she's looking online and showing me and telling me, this guy's still talking, and I'm letting him talk. Basically, digging his own great talk. How he can get this as fast. It's a great deal. We have it in stock, all this. And then I was like, all right, enough's enough. So I call him out. And I say, listen, buddy, everything you just showed me is retailing on your website, Ashley website, for $1,300. But you're quoting me for more than double that. And he knows he's caught, but he's trying to kind of just, find a way that he can get away with it. When you see someone that's just caught lying or whatever, he starts looking through his notes. He's pausing, keeps digging, and I'm not letting him off the hook because I'm pissed off because we bought a lot of furniture at this place. So I tell him, I said, look, I'm going to be honest with you. I'm really pissed off since I'm a great customer that you quoted me for $2,800 for furniture that's going for $1,300 on your website. So you know what he tells me? He goes, yeah, but the good thing is we always price match. I said, and I said this to him, excuse me, I said, it's your own fucking site. It's your own site that you're price matching. You price match other people's sites. I get it. Best Buy, Amazon, Walmart. I get it. This is on your site. On your site that you did not tell me about. So then he starts going into, he tells me about Ashley Furniture Stores, individually owned, or the website is corporate. And look, I understand that. If you're charging me 10% more, you're in store. I get it. Online can be cheaper. These guys have to make money, a little bit of commission, but more than double this kid. And how fucked up is that? More than double he quoted me. And I'm just looking at him and he's looking at me. I'm like, really? But looking at the bigger picture here, and stay with me. There's a reason why I'm telling you this story. I started doing some research on Ashley and realized its parent company owns the online operations. It's actually called Home Store. And they have 800 stores. Now, most of the home stores the Ashley Home Store that I went into. So they call Ashley, but it's really Ashley Home Store. The home store owns online. But all these stores are independently owned. So they have to buy all the furniture from Ashley Home. Think like a franchise. They buy all the furniture from Ashley Home, which they manufacture by themselves. Two brothers own it, making a fortune. But then these owners, I guess, have the right to sell these items for whatever fucking price they want to and mark it up, and they're going to make all that money on the commission. If you don't know better, that, hey, let me go online and just check this out to see where it is. So it's not like McDonald's makes royalties from the owners and the franchises. They're going to send them all their products, the burgers, the french fries. They send them everything, right? They set them up perfectly. But the franchise owner for McDonald's, he can't sell a Happy Meal for $20 when it's priced at less than $5 everywhere else it's being advertised. But when I look at this model, which I'm sure there's tons of businesses out there doing this, especially in the furniture industry. The reason why Wayfair is where it is. Look at Wayfair. Look at their stock. Everyone's ordering stuff online. I actually went to Wayfair, and I understand why it's such an amazing site. And right away, 10% off because you're a new customer. You know, constantly just the algorithms there and the AI. It's just they're sending me stuff that they know I'm going to like, which is really cool. There's a reason why that stock's so high. When I look at this model, you realize, especially with Ashley stores, they'll never, ever, ever be able to compete with online again. And it was always that way for the world to see. Online was cheaper than big box. We understand that. Online was like, we kind of need big box too, right? You have Amazon opening up stores. Apple opened up stores. Microsoft opened up stores. Tesla opened up stores, big box. Because they knew that some people want to go there and pick up their items. But with online operations, I don't have to go over the specifics with you, but you know why it would be so much cheaper. You have to pay for rent, fewer employees, less healthcare. But online, we all knew was cheaper than big box. But not everyone took advantage of it. And hear me out here, guys. In fact, hardly anyone took advantage of online shopping, which sounds crazy. It sounds crazy to any one of us who's ordered something on Amazon, ordered something online, and got it delivered to us. Because when you look at e-commerce sales, so e-commerce sales has been a secular growing trend for a long time. What does that mean? It's when we steadily hire year after year after year after year after year. It's not cyclical where during certain times a booming economy it does well, and then when it's a weak economy it doesn't do well. It's a secular trend that's been growing. More and more people will go online. But do you know how much actually is a percentage of total retail sales of the U.S., which is a little over $5 trillion? It is retail sales. I'm using data from the U.S. Census Bureau, which includes gasoline, which you're not going to be able to buy online, but it includes everything. But do you know how much? I want you to think about it in your head as a percentage of total retail sales in the U.S. come from e-commerce. They have that number. In 2010, it was just 4%. 2014, it was 6%. In 2016, it went up to 8%. By 2019 year end, it grew to 11%. That's all the shopping that's being done online. I would think it'd be a lot more than that, considering the discounts that you get. But it's just 11%. What does that mean? It means it can grow incredibly. Now, in 2020, this year, as of Q2, so this is the end of June, that quarter was at the height of COVID. E-commerce sales came in at $211 billion. That was 44% higher than last year's comparable quarter. And you know what else? That 44% is the fastest growth rate. This is unbelievable when I look this up. The fastest growth rate we've seen for e-commerce sales since before the dot-com crash. So we're looking at 1999. You're looking on an annual basis, e-commerce sales have not grown this fast since the pre-tech bubble, the dot-com bubble. And you have to think about that for a minute. The internet was still in its infancy back then. You could argue it was in the very first inning in terms of growth. I mean, Netflix and Google were, 2 years old? Netflix was still sending DVDs to you in the mail. I mean, streaming didn't exist. Tencent, the largest tech company in China, was 1 year old. Facebook, Twitter didn't exist then. The iPhone wasn't even invented yet, right? It was like 2007. No social media, no streaming, no cloud. We weren't even on 3G yet. Verizon became the first company to launch a 3G network, and that was in 2002. So throughout this whole entire period, right now, this growth has been faster than any other time dating back to pre-dot-com crash. So you're looking at, for the quarter, the total retail sales for Q2 was $1.3 trillion. So if we times that by 4, it's a little over $5 trillion annually, number I mentioned earlier. And if you take the $211 billion of e-commerce sales of that $1.3 trillion, it amounts to 16% of total sales now for e-commerce. Guys, from 11% to 16%. That's in an industry. We're not talking about a company increasing sales. We're talking about an industry that's been growing at every couple of years, a little higher, a few percent. Now it's 16% of total sales. And it's a tectonic shift, an anomaly, deviation, divergence, whatever word you want to use, but something that nobody could predict or forecast. I mean, it seemed like it seemed like it because it's a certainty now. But people say it's a mathematical uncertainty. Like, nobody could predict how fast this would grow. Now, why did it happen? We all know COVID. Staying at home, they close all these shops. That's the obvious answer. But it's much, much more than that. And once you understand this, you're going to realize that a lot of these high-flying names, they're going to go a lot higher. And you're also going to realize that we're not even close to being in a bubble. Not even close. And we hear that mentioned. That's a question they ask almost every guest now in CNBC and Fox Business. Do you think we're in a bubble? Do you think we're in a bubble? Do you think we're in a bubble? You could argue we were in a bubble in 1996. You could argue we were in a bubble in 1999. From 1999 to the peak in 2000 in March, the NASDAQ doubled. And people thought we were in a bubble in 96. And a bubble is irrational exuberance. It's people buying stuff they don't even care. These are companies that are seeing unbelievable growth. They're seeing demand. They're seeing sales explode. They're seeing earnings explode. Look at the numbers. And why is this happening? Because staying at home, and this is the bigger point, it forced people to buy things online for the very first time. I know it's going to sound crazy to some of you, especially those of you who shop Amazon a lot. But there's a lot of people that aren't on Amazon. But these people didn't have a choice. If they wanted things, they had to go online. They were forced. They were forced to change their behavior. Pretty big deal since we're creatures of habit. We hate change. We all hate change. And we like to do things the way we like to do things. And we hate when people tell us an easier way to do something that we're used to doing, right? Oh, you can do this so much easier. My iPhone is so slow. Well, you could pay for storage, keep it on the cloud. Apple makes it pretty easy, charges a few dollars. People don't want to hear. You pay your cable company $150 a month to watch whatever, Chicago Fire. Forget about Chicago PD. Anything PD is gone now. We all know that. Those are the rules. Every PD. Unbelievable. Taking in cops out of cartoons. Insane. Anyway, but now you can stream it online. You can save a ton of money. Back in the day, millennials, you're not going to remember this. We used to go to travel agents to book trips, and some people still do. But everything can be done in 5 minutes using Expedia Priceline, but some people still have a travel agent, believe it or not. So I think traveling internationally. What about using a full-service broker? That was the norm. They used to charge you a fortune. You still kind of need one if you want to get to private placements. You like to have one at Goldman Sachs, which you're going to get into a lot of great deals. But now you can trade online with no commissions. Where am I going here? Why am I saying this? These examples provide an easier, cost-efficient way to consumers. But they're not necessities. All these examples I just mentioned were not necessities. People still going to use full-service brokers. They'll refuse to put all the pictures, downloads on cloud. They'll continue to pay cable companies a fortune when you get the same service for a huge discount. And yes, some people will still use a travel agent, believe it or not. It's not a necessity to them. You don't have to do that. So you're not being forced into something. They're not being forced to change their behavior. This time is different. People who never used Amazon before, and there's a lot of people, believe it or not. It seems like everyone, but there's a lot of people. They just figured out they could order paper towels, milk, sanitizers, ordered online and have them delivered at their doorstep in a day or two. And they could reorder them automatically every 2 weeks. And the best part, it's cheaper. I don't have to run out to a grocery store and worry about catching COVID, which is a big deal to people in a danger zone over 65 or have underlying conditions. But you want proof of this? How many people, and be honest with yourself, how many people do you know that talk about the massive amount of boxes they are getting delivered to their homes now from Amazon? Tons of people. Everybody talks about it. Nobody really talked about that before. I have heard that dozens and dozens and dozens. Oh my God, I got to see the Amazon boxes. And it's reflected in Amazon's numbers. Pretty easy. Amazon, did you see Amazon's numbers? And this trend of more online shopping, it's just the beginning. We're at 16%. We know COVID's going to, things are getting better across the board in the U.S. We see it in COVID in terms of statistics. Hospitalization rates are coming down. Death rates as a percentage are coming down tremendously. All the danger spots, Florida, Texas, whatever. All okay now. Numbers coming down. But New York, California, stay closed. So sad. The USC has to beg their freaking mayor to play football. Leave it up to them. If there's certain people that don't want to go there and they worry about COVID, it's fine. But if you look at a demographic and you look at their age group that catch COVID, they have a better chance of dying from the flu. Okay? Enough with the politics, enough with the bullshit, especially California, New York. You're always going to be Democratic. You don't have to worry about losing votes. Just do the right thing. Because you're messing with people's lives. Sorry, didn't mean to go on a tangent there. But you're seeing COVID numbers get better, which means businesses are going to open back up in terms of those brick and mortar places. Even New York said, you know what? After 6 months, we'll allow indoor dining at 20%, 25%. It's too late, Mr. Cuomo. It's too late. All these companies are out of business already. We've been open up in Florida since May. All the numbers are getting better. We're fine. Things are cool. We're practicing social distancing. You're late to the trend. That's okay. But brick and mortar, you're seeing more and more stores open up. You're even seeing hair salons, gyms, movie theaters. Places that you thought would be closed, they're starting to open up. But do you think older folks are going to run back to shop at big box retailers anytime soon? Especially now they learned about online shopping, and so many people have for the first time. Again, it was only 11%. 11% of retail sales. Now it's 16%. Unbelievable jump in a number like that. Unbelievable. But you think they're going to run back? If I was over 65, listen, I talk about why people should be going out. Yes, they should be practicing social distancing. If I'm over 65, it's a different story. That's why we shouldn't have guys like Fauci, close to 80, making decisions for us as someone that's in a danger zone. If you look at everybody making these decisions, even, Pelosi's 80, Trump's 74, 73, Biden is 77. These are the people we want making decisions about COVID when they're in that danger zone and they're at significant risk compared to the rest of the population? Absolutely not. But those older folks aren't going to run out. They just realize, wow, I could spend money on Amazon and get everything delivered to my doorstep. If I want to get out, I can walk around the house. I can go to a park and I don't have to worry. I don't have to be in front of people where you might have one of those assholes say, I don't need to wear a mask. Doesn't matter if you believe the statistics or not. Just wear it because you're going to make that older person feel more comfortable. Isn't that worth it? Then fighting about it and telling everybody why they're wrong in statistics, who cares? You really don't know. We really don't know. There's a million studies out there. We really don't know if masks help. Believe me, I looked at all the studies. You really don't know, but I'm wearing a mask. Why? Because it makes people comfortable. And if I was older, I would hope other people wear a mask because I'd be worried. So where am I going with all this? Those of you who believe we're in a bubble, those of you who believe the rally in names like Overstock, Amazon, Wayfair, Netflix, Nvidia, Etsy, Square, Datadog, Cloudflare, CrowdStrike, Zoom, I could keep going. If you think the rally is over in these names, you're absolutely crazy. And even throw in there the big box retailers that have the best online operations, the Walmarts, the Targets, the Best Buys. These are names being driven by growth. They're not being driven by valuation, not being driven by fundamentals. We know that. You're looking at what trends these guys are in. They're in AI, right? Artificial intelligence, cloud, big data. These are all trends that were growing, and I covered all these years ago, right? From going to Consumer Electronics Show for the last 9 years. You follow my newsletters, you know everything there is about these trends, and you made money off them. And they're continuing to grow faster and faster now. Because of COVID, these trends, they're on steroids. They're on steroids. And this growth is not going to slow for years and perhaps decades because it's forcing people to change their behavior. And when they're doing that, They're realizing how easy it is to order stuff online. They know how easy it is. Well, I don't have to go to a conference. That's why I'm going to just go on Zoom. Did you see Zoom's numbers? And they're comparing this bubble to the tech bubble, right? Where you had irrational exuberance. These companies weren't growing sales like the way they are now. These companies weren't growing earnings the way they are. They didn't have cash flow back then. They had a web page, maybe four web pages, and a great idea. And these things are having billion-dollar valuations. I've never seen a company grow faster than those numbers that Zoom put up in such a short period. It's incredible. I mean, look at Peloton. Peloton's a name I wouldn't recommend. I don't think that's a secular shift. I love the fact that CEO went on. I love this part. The CEO's like, when Apple just announced their music service, right, for $9.99, Fitness Plus. That's a good thing. That's a good thing for the industry. It validates our thesis. When a $2 trillion company comes into your industry, not to mention their growth model, what is it based on? It's based on subscriptions that you're going to be charging more than what Apple is offering, especially for the real connected one, which is $39.99 a month. The rest of it, I think, is $12.99 a month. They have like 3 million subscribers. But the best is, they mentioned on the call, the growth model is to provide more content to people and more music choices. I'm pretty sure you're not going to be able to provide more content and more music choices than Apple's service. I'm just guessing there. I have a feeling. And that's their growth model. 80% comes from hardware, but their growth, the reason why Peloton's taking off is because of that subscription service, which just got thrown on the bus by Apple because everybody owns an iPhone or an iPad, most people, and it's going to be very easy for them to get on these new fitness apps, new fitness programs. I'd be worried about Peloton. I don't think that's a whole shit, but Zoom, CrowdStrike, Etsy, it's different with these companies. NVIDIA. But you're looking at these trends, the AI, the cloud, the big data analytics. They're on steroids. More people online than ever. And like I said, this growth, it's not going to slow anytime soon. When you have a behavioral shift, that's what happens. Now, what else are we seeing behavioral shifts in? Look at healthcare. Online doctor visits. Online diagnostics. I mean, I'm seeing this with my mom where it's a pain in the ass for her to go. I had to take her to the doctor yesterday for a checkup. She's doing great, by the way. Thank you for all the comments, concerns. Really, really appreciate that. I mean, we were told that she was going to die twice, and she's driving now, which is incredible. I mean, it's just really, really incredible and really great news. But I'm there with her when she's talking to her doctors online sometimes. That's a behavioral shift. Supply chains, they're becoming more localized. They have to, where so many places are closed off globally. I mean, you see Europe's, you can't go to Europe right now. You can't go to a lot of different countries right now. Well, what about your supply chains that are from different countries? You're forcing them to be localized. That's a behavioral shift. They're not going to do it just for now. When everything opens up, they'll be like, okay, let's go back to Europe. Let's go back here. No, this requires opening up new plants, hiring more people. Again, a behavioral shift. The insurance industry. And you look at property casualty, where these guys are getting murdered right now. And less insurance could result in consumers buying fewer assets like cars or real estate, which we're not seeing right now. But how much will that insurance cost? It's the greatest industry ever. It's not an insurance company. It's one of the only industries you got to put a ton of money up front for something that you think is going to happen. It's the greatest industry ever. But now they got screwed. You see a lot of insurance companies still down tremendously. They're coming back a little bit, but they'll find a way. They'll find a way to insure things that don't need to be insured, and they'll make money off you and not even go near the things that are risky anymore. Especially in this day and age where everyone's nervous, paranoid about everything. What about working from home? Another major shift. And companies are realizing how much money they could save instead of opening up how many offices in major cities. You look at the Fortune 500 companies, they have like 10, 15 offices in all the major cities. You don't need them no more. You know how much money that is? The leases, the rent, do you have any idea how much that costs? I lived in New York City all my life. Holy cow. You can get whatever you want now. Hell, we're all at the red carpet if you're looking to buy real estate or lease anything in New York or some of these major cities. The entertainment industry. I mean, I don't know if you saw this. So they released a couple of movies and they did absolutely horrible in the theaters, even though they just opened up. Horrible, which is resulting in every studio pushing their pictures out further and further. We're going to launch this in December now, towards Christmas, in January, in February. You can keep going. March, April, May, June. The traffic is not going to come back like it once did. I don't care what movie you release, what Avengers movie you release. You better be putting that on streaming. And by the way, it's interesting that Disney still hasn't reported their streaming results for Mulan. I thought that they would throw that out there immediately because that would be a boom for their stock. The fact that they haven't said anything makes me worry. Well, maybe that didn't work as good as they thought it would. I thought it would work. Maybe not. Why haven't we seen those numbers? We see the box office numbers every place else all the time. They release that a daily basis, weekend, how much money these companies generate. Why is Disney not putting out that number? Interesting. Interesting what they choose to put out and not put out. They're putting out their subscriber numbers every time they're good in the middle of a quarter because that's what's driving the stock. Kind of interesting. What about digital advertising? Social media networks. We're going to see higher demand for social media. Companies are going to do less advertising on billboards, streets, mass transit because nobody's really on the streets. There's not as much traffic in these places. Think about Times Square and having one of those beautiful, beautiful lighted up billboards. Hundreds of them. I mean, I don't even know how much that costs. That probably costs $1 million for 5 minutes. Who knows? Not that expensive, but you get my point. There's nobody there. Even for New Year's, how many people are going to go there? 25% of the audience? Maybe. All going to be wearing masks. There's going to be fights. There's going to be protests. I mean, that'd be crazy to go to Times Square to watch the ball drop. It's going to be a shit show. There's no way. It's going to be dangerous. It's going to be crazy. Think about that. Again, behavioral shifts. Look at the unrest across every major city. A lot of them are not safe right now, which is causing a lot of wealthy people to move out of these cities into the suburbs. Not good for restaurants. Parking garages. That might sound funny to people maybe in the Midwest, in New York City. They don't allow you to park any place. They'll have 10 different signs up, and they only need one sign that says you can't ever park there. But they'll have 10 signs that take you 15 minutes to read, and you think you can park there. Doesn't matter. They're going to give you a ticket. And they're going to tell you. To park in some of these garages is like $50 for a couple of hours. Gone. Gyms in major cities. The tax revenue for these cities. But this is how you must look at investing going forward. It's not a temporary shift. It's a behavioral shift. We don't see these often. I think text messaging. Nobody leaves voicemails anymore. My voicemail was just filled up. I had no idea. I don't listen to voicemails. If I have any investors out there, you're going to call me because my investors in CEO token, which is going to be launched in a couple of weeks, free trading. I talk to a lot of them. Don't leave a voicemail. Send a text. It's a behavioral shift. Social media. That's where everyone communicates now. In their groups, they email, they through Facebook. That's just the way it's done now. But it's resulting in trillions of dollars being shifted from the old way of doing business to new ways. And that's going to result in a lot of winners and a lot of losers. And the companies that are seeing this shift, if you look at all these high flyers, I wouldn't throw Tesla in there as much. There's some of them, but you're looking at those names I mentioned earlier. Earnings are exploding. Sales are exploding. Cash flow, subscribers, they're exploding. That's what the market wants to see. To say that this is in a bubble is absolutely crazy because these things aren't going to crash when you're putting up that kind of growth, those kind of numbers. Those are the businesses that are going to see the most demand. And it's going to continue and continue and continue. But again, that's how you must look at investing going forward.